Are gearing up for London's session. Okay, I'm finally back in the office, ready to give everyone a market overview in terms of the price of gold. I've been out of the office for roughly almost a week now. I had some stuff to take care of, but I'm finally back in the office, ready to give everyone a breakdown on gold's price. Okay. So, market as of now is still very choppy, but we do have our bullish bias intact. As expected, because US joined the Iranian war, the Iran-Israel war, we do see a gap up in price. But this was quickly taken out. The gap was quickly taken out during Asian session. This was somewhat expected. Because we did see a similar pattern when Israel and Iran first went to war. Okay, when Israel first bombed Iran and Iran retaliated, I'm thinking late Friday night. This was a similar pattern we saw on Monday. Okay, so I am very cautious in terms of price. I'm not expecting a very strong bullish run. I'm expecting some consolidation, some choppiness in the market, indecisiveness in the market, but with quick and sudden burst towards the upside. So we should be cautious and keep to some bullish orders, but when technicals do align, we are able to take some sells as well. Okay, so the primary theme for this period of time would definitely be the US-Iran-Israel war. We are seeing wars being escalated. This is the 8th day since Israel and Iran started this whole thing, and I would say since Friday, the US joined in as well. Okay. So other fundamental drivers would definitely be the Fed's tone in terms of Fed's tone in terms of interest rates and of course inflation. So the market is pricing in 2 rate cuts this year. Me personally, I'm seeing only one. Okay, or maybe not at all. That's even possible. But either one or no rate cut. So let's just trade according to that. We also do have PMI data coming out this week, and that is also one of the fundamental drivers for the week ahead. So of course, as all of you may know, Trump joins Israel's military efforts against Iran. Trump is giving Iran something like a final chance before authorizing full-scale military action. So safe haven demand for gold definitely remains strong in times of war, though we do see some profit taking and of course technical resistance that caps aggressive upside moves. Other than that, it will definitely be Fed's hawkish tone in terms of cutting rates and tariffs. Trump is signaling more tariffs on pharmaceuticals, which of course sparks trade concerns. Other than that, I'm still seeing fundamental drivers being very bullish on gold. So upside is still favored, but of course we have to be cautious. So watch list for today, we do have the PMI numbers coming out for New York session tonight. Iran's response in terms of towards US and of course Israel's alignment. And if we do see something like something not as direct but also direct, something like Iran bombing US military bases around the Middle East, or even fully closing down the strait among the Persian Gulf, this could, or even as simple as bombing a small US fleet, this could reignite the US's efforts in terms of this war. Okay, and that would definitely cause gold to spike. So always keep alert on headline news in terms of the war. Of course, always fact check them as well if they are legit, because we have seen the market reacting off of rumors, especially during the tariff period, when tariff was this new thing. We do see a lot of rumors and markets reacting off those rumors as well. So of course, fact check them and do not enter a trade blindly. So with that, let's just get deep into our technical analysis for the day. So this is the daily chart. We are in the daily chart. Please ignore all these insights for the moment. Points that I want to mention would definitely be previous day's high, and of course previous day's low. For me, I do not expect these levels to be taken out at this previous day's low to be taken out today. Probably not going to happen. What might happen the most would definitely be taking out the Asian low during London session. If we are bearish, we might be able to take out the Asian low before continuing a bullish high. But key level I want to mention will be this FVG. We have closed inside this FVG for a couple of days now. If you look at the line chart, we are still inside the FVG. However, we have 15 hours before this daily candle close. What do you think is more probable with this fundamental situation or fundamental drivers that we have currently, with wars and everything, and the weakening US dollar and everything? Are we expecting gold to continue to push up? If push up, which is a safe bet that we can expect gold to push up towards? Best case scenario, we close above and have a bullish candle. Worst case scenario is probably closing wins inside the FVG. Okay, and with knowing that, right now at 3358 outside the FVG, outside this FVG towards the downside, we are in of course a discount. Okay, we are in a discount in terms of price. If you were to know that price will close inside the FVG, probably you should be buying right now. But of course, we are not swing traders, and with that, we have to go deep into the lower time frames to pick our spots. Okay, because if we were to buy now, our SL should be around 200 pips below this low here. Okay, so of course, definitely let's drop down into the lower time frames to look for positions to take buys. If we are at the 4 hour, what levels do you see here? The price just closed 15 minutes ago, 13 minutes ago, inside this inverse fair value gap. This 4 hour fair value gap here got totally invalidated with this bullish candle, causing a change of character here, changing a bearish character to of course a bullish character as of now. Price tapped into this inverse FVG. This 4 hour candle wicked out, but still closed inside this inverse FVG. If we were to look at the line chart, it looks something like this. Okay, so hopefully this 4 hour candle closes above this inverse FVG for us to be able to take buys towards the upside as well, further confirming our bullish bias. Okay, so that's the 4 hour. 4 hour, what do we have? Bullish change of character, price respecting currently previous candle, respecting this inverse FVG. If we were to go down lower into the hourly time frame, what do we have here? Bearish FVG, bullish 4 hour IFVG. So this will be our short-term range, short-term level that we two levels of price that we are carefully monitoring. Okay, that's the hourly. Hourly, we also have the Asian high and we have the Asian low. Okay, dropping down to the 15 minutes. What do we have? Nothing much on the 15 minutes, I would say. We do have a change of character here, but no break of structure. Okay, the 15 minute, we are seeing bullishness. We do have, use this as the latest swing low. We do have an order block here. Price is respecting that level of order block, but we do need something of a change of character against these highs here before taking buys towards the upside. That is definitely preferable. On the 5 minute, we can see much clearer. We do have a change of character here. So this line is our change of character. We do have a change of character here, but we do not have a break of structure. We do not have a continuation push towards the upside. Price is retesting these levels of inefficiency here. Price is currently retesting this level of inefficiency here and here. Okay, so what am I expecting? First scenario, we create a push against this 4-hour FEG, retest this level, preferably within the 5 minute structure if we're taking the 5 minute entry, break above BOS, see some sort of reaction of the FEG, retest the BOS, continue to push higher. Retesting this FEG and hopefully pushing towards Asian high. This is the bullish scenario, or the easiest scenario to trade. If price runs this way, of course these are our levels of interest. We are expecting reaction off of those levels of interest. If we break pass through, of course wait for a retest to continue to take buys towards the upside. Internal to external. Okay, internal liquidity to external liquidity. Very, very basic. By the book. Second scenario I'm looking at, price continues to dip lower into Asian lows, wicking the Asian low, retesting, and continues the bullish movement. A similar path to this first scenario, bullish movement, but taking out external liquidity, the Asian lows, taking out stop losses here. All these buys here will be taken out, taking out liquidity before pushing higher towards Asian highs. Last case scenario, we just consolidate against these levels here. Liquidity here, liquidity here, liquidity here, liquidity here. We just consolidate. This is the worst case scenario. We do not want this to happen. But the best case scenario would definitely be either this or this. This would take more time. I have to confirm just a wick off of this level of Asian lows before pushing higher. Best case scenario, we just get strong bullish movement, wait for retest, continue to take buys towards the upside. Okay. So these are my 3 scenarios for the day. If we are to go bearish, taking out previous day's low, it might happen, but I'm not too. I won't be looking forward to that. Okay, because that will be going against our bias, and we will have to take some riskier positions if we are to target Asian previous day's lows. Okay. So that's it for me for this analysis. I hope everybody takes the time to watch, and I hope to see everybody inside the teams and also in the public channel, and let's try and book a good profit today. Okay, first day of the week, let's start strong.